Hey guys, so what I'm about to do is I'm about to show you what $1 million baby policy look like. What that mean is you can actually put so much money away every month, and by the time your child turns maybe age 35 through 45, sometimes even 50, you can have $1 million. This is actually how you create generational wealth. Now, the key to this is you don't have to be the only person putting money in this account every month. This can be a family effort because the family also can partake in spending that money, right? Duh. So let me show you how it's done. And it's done through an IUL policy, which is an Index Universal Life policy. So for this example, I'm going to say the baby name is Allison. We're not going to put a last name. We're going to leave that as client, and it's going to be a little girl, and we're going to say she was born in 2020, which will make her 4 years of age, okay? All that looks good. And this next screen, I'm going to max the cash. So which means I'm going to do a minimum death benefit. I'm going to max the cash value so that most of the money every month can go towards the savings and the minimum amount will go towards the death benefit amount. We want to make sure this is an increasing account so that in the event something does happen, the family can walk away with both the cash and the death benefit, okay? We're going to specify an amount. So let's use, let's say $550 a month. I know that it's an aggressive number, but don't forget, I said the entire family is going to put into this bucket because the money is going to be for everyone, okay? If that's how you want to set it up. So that's up to you. Okay, so let's take a look. And if we pay $550 a month, by the time this child turns age 42, we have $1,039,511 in this account. That's a lot of money. The death benefit amount is $2,453,246. So we're going to save this money for roughly 39 years. Okay? I don't think that's bad at all because a lot of us 40-year-olds got $50. I'm one of them. Okay, so let's check this out. When this kid turns age 10, she will have $49,000 in her account. When she turns age 20, she will have $177,000. Age 30, she will have $420,000. Age 40, was that 30 or 40? Age 40, she has $900,000. And age 45, she has $1.2 million. Now, here's the thing. When I created this illustration, I created this illustration at a modest 6%. However, because this is an Index Universal Life policy, the ceiling is 12% and the floor is 0, which means if the market, which is the S&P 500, is actually doing good and it hits 15, 20, 30%, you can benefit 12% from that market. You don't get the max number. You only get the 12 because the floor is at 0. If the market crashes, you don't lose any money. You just remain where you currently are. So I think I like that. What you think about it? The way this account is set up, you do get the cash value and you get the death benefit amount. This money is tax free. So, for instance, let's say at age 25, the family want to pull off $100,000, which means you still have $179,000 in this account. That $100,000 that you pull off this account, you'll be able to pull it out tax free. Now, here's the thing that make this account so juicy, right? That $100,000 will come off of this $700,000, which will lower the death benefit amount to $600,000. However, the next year, the compound interest on this account will still be at $279,000. You didn't know that. I just taught you something. Go and let Jessica know she need one of these accounts because she got 5 kids. Okay, what else is great about this account? It protects against market crashes. You can pull the money down tax-free. It's an IUL. So hypothetically speaking, let's say you guys had a bad year and you didn't make payments, right? Because this account has all this money in it, the account monthly payments will just come off of your surrender value. However, I don't suggest that you do that, but sometimes we do run into hard times. That's another reason why this is a really good account to have. So this is $1 million baby policy. I know this baby is now 45, but 30 years from now, the family will be like, hey, we just created some generational wealth. And I'm just about to put you on game real quickly. You can take this policy and put it into a family trust instead of into someone's personal bank account. And you guys can borrow off that money when you need it. Oh, Suzanne needs a house. You know what? Let's finance her house through the trust, and we're going to pay the money back in the trust. That's how you do it. You want to buy a new car? Oh, Kevin, you need a new car? No problem. Pull the money out the trust, buy the car, make the payments back to the trust. You're going to have less interest because this account will let you borrow, and I'm going to guess around 4 to 5% interest. However, Kevin, credit ain't that great. He going to go to the dealership and he's going to have a 27% interest rate. It's like paying double. You know, y'all been there back in the day. Or let's just say 13%. He went through Capital One. So the interest rate on this is way better than the interest rate on buying a house or even purchasing a car. Okay? Just food for thought. Think about it. You don't have to do it. Don't be like Shark said, go buy a house. Do what you want to do. I'm just trying to show you the information. I am the Shark. You can't get one of these IUL policies through my company. I can write it up for you or just show you an illustration of what it looked like. Go to my website, thesharkinsuranceagency.com, schedule an appointment with me or just fill out the application. You don't have to be a baby to get one of these accounts. If you don't have a retirement, this is a great way to start saving for a retirement. The money is tax-free. So think about that. That's one of the best benefits. Google tax code 7702. You can put money into an insurance policy. You just can't launder with it. Okay? That's for all you criminals. You can't launder. But that's okay. I didn't call you a criminal. I called those other people criminal. Give me a call, like, share, and subscribe. And thank you for watching my video. Go to my website,